The OCR has been cut by another 0.25 down to 3.5% as at 9th of April 2025. And the question on everyone's lips is, what do we do about this? What does it mean for us? So the feedback from the Reserve Bank is that inflation is still in the target band, which is great. That means that things are not going up by as much as they were last year. And also that they expect the current economy predictions to continue. So that means that they haven't seen a great deal of uptick in the economy in terms of people spending money, and they are expecting that to continue. So probably there will still be a slight downward trajectory in terms of rates. Already, most of the main banks have dropped their variable rates. That doesn't mean a lot to most borrowers, as most of us have fixed interest rates, so we have a 1 or a 2 year rate. But variable interest rates dropping is still good news for those of you who are floating. What are we expecting in terms of fixed interest rates? Well, none of the banks have moved their rates as of yet, and to be honest, I'm not surprised. I think most of the banks have actually priced in this 0.25 cut. It was expected. Some economists thought that it might be a little bit more, but I think 0.25 was kind of where everyone had sort of arrived, and the banks have kind of been playing on that for the last couple of months. There were some drops after the last review, which was in February. So we're probably not expecting a great deal of fixed rate movement over the next couple of weeks. However, that is possible and it might be relatively minimal. So if you have got a fixed interest rate that's come up either last week or it's coming up within the next couple of weeks, thinking about what that impact is on your financial position is probably key. So if it's already floating, what's the impact of, say, fixing now on today's rate at, say, for 12 months, or floating for a couple of extra weeks to hopefully get a little bit more of a drop? It's kind of marginal. So obviously, as always, we do expect that it's a great idea to have a chat with an advisor about it, but also it's about really aligning what rates you're choosing with what you're trying to achieve. So for example, if you are looking to sell or make a big change in the next 6 to 12 months, we don't want you fixing for 2 years, particularly in a dropping interest rate environment, as that does open you up to break fees and things like that in future. So as always, little bit of commentary here from us on rates, but also really important to get the right fit for you and your situation. So please get in touch with us, jump onto our Contact Us page, book a call with one of us and have a yarn about what is best for you and your situation. Talk soon.